Imagine you are sitting with your phone in your hand thinking about the future. You have $100. Maybe it does not feel like much, but this small amount can be the first brick of something much bigger. Today we are talking about how to take that $100 and grow it to $1,000 through investing in US stocks in 2025. So let's start from the very beginning. Investing is simply putting your money to work instead of letting it sit idle in a drawer or a low-interest account. When you invest, you are allowing your money to participate in the growth of real companies. Imagine owning a very small piece of Apple or Amazon or the companies behind your favorite apps every time those companies grow or profit. Your share can grow too. This is how people build wealth over time. But before you invest, you must decide what you want from your money. Are you saving for something? Short-term, like a trip or something. Long-term, like financial freedom. If it's short-term, the stock market may not be the right place, because prices can go up and down quickly. But if your horizon is 5 years or more, you can ride through the ups and downs and come out ahead. The next step is to choose where to invest in. 2025. There are many brokers that let you start with as little as $1 and buy fractions of shares. These apps are safe, regulated, and beginner-friendly. Examples include big names like Fidelity, Charles Schwab, Robinhood, or Sophie. Many now allow international investors to open accounts as well, but always check if they are licensed to operate in your country. Once you have your account ready, you decide how to begin. You could deposit the full $100 or spread it over a few weeks by adding 10 or 20 at a time. That method is called dollar cost. Averaging it helps smooth out the price volatility, so you do not worry about timing the market after funding your account. You face the main question: what should you buy? One simple answer is to invest in an exchange-traded fund or ETF. An ETF, like the SPY or VOO, tracks the entire S&P 500 index, which represents the biggest US companies. Instead of betting on one stock, you own a piece of all of them. This spreads risk and gives you a balanced start. You can think of it as buying a basket filled with America's most successful businesses over the long run. These have shown steady growth and paid dividends that can compound your returns. If you feel curious, you can use a small portion, maybe 10 or 20%, to buy individual stocks that you like, maybe a tech giant or an energy firm, but keep most of your money in the diversified ETF to stay safe. Once your first purchase is made, you are officially an investor. You now own part of the market, and from here, your goal is to grow steadily, not overnight every month. If you can add a small amount, $50 or $100, and watch your portfolio expand, you do not have to check every day. Markets go up and down all the time, but patience and consistency are what make the difference. Imagine your $100 growing to $1,000, not by luck, but by disciplined time and compounding. Over time, your returns generate their own returns, like interest on interest. The longer you let them work, the faster they grow. That is the magic of compounding, and it rewards patience. There are a few common mistakes to avoid. First, do not panic when prices drop. Remember, markets move in cycles. Even strong companies can fall temporarily. Second, avoid chasing hype or hot tips from social media. If something sounds too good to be true, it probably is. Third, do not trade too often. Every trade can trigger taxes and costs that eat into your returns. Let your money work quietly in the background. Over time, you will learn to recognize that investing is less about prediction and more about preparation. If you keep adding little by little, your first $1,000 will arrive sooner than you expect, and that milestone will not be the end. It will be proof that you can build wealth from discipline and small, consistent choices. Once you reach that goal, you can plan new ones. Maybe diversify more, add dividend stocks, or explore bonds or international markets. But the foundation is the same: consistency, patience, and knowledge. In 2025, the U.S. market remains one of the world's most innovative spaces. Companies in artificial intelligence, green energy, healthcare, and technology continue to lead growth trends. But as always, balance is key. Not every company wins. Diversification keeps your risk lower while still letting you benefit from overall growth. One last reminder: always reinvest your dividends if you can. When a company pays you a small cash dividend, use it to buy more shares. That way, your future income grows automatically and your compounding accelerates. Think of each reinvestment as planting another seed. The more you plant, the bigger your forest grows. Finally, remember why you started. You're not just investing to turn 100 into 1,000. You are building the habit of financial growth. You're teaching yourself patience, discipline, and confidence over time. These habits can take you far beyond $1,000 into a future where your money supports your goals and not the other way around. So open that account, make your first move, keep learning, and stay calm through every rise and fall. The market rewards time, courage, and consistency, and your journey starts with that first 100.